Hi, my name is Jonas and I'm from Danier Accounting. So in this video here, I'm not going to talk so much about tax and VAT and all these things that you might have seen on our other videos. What I am going to talk about is what could be the biggest fear of all entrepreneurs, which is to go bankrupt. And the reason I talk about that is because even though I am an accountant, I am also an entrepreneur, and all accountants that start their own company is in the same position as you. They are starting a new business and they worry, of course, what happens if things would go wrong. So what I did to have some kind of comparison is that when I was in my 20s and I was starting my business, I asked myself, Jonas, what is the worst thing that can happen? And it was running out of money. And my biggest fear at the time was that my quality of life would be on a level where I couldn't live in a nice place. Maybe I would have to stay, in the same room as 10 other people, or, that was what I had in my imagination. So I decided to challenge myself and I went to Hong Kong and I checked into a hostel and I lived there with 9 other guys or boys who were like pretty young and stayed there for quite a long time. And at the same time I was working on my business. I had my laptop and I was working day to day, but kind of living in what I at the time thought would be a very bad situation. What I did find though was that it was actually not that bad. I was making very cool friends. I found out that a lot of them also were entrepreneurs, having small companies with websites and so on. I was just working with accounting, but we kind of had the same challenges and day-to-day issues. After some time, I could see that this is okay. This is not that bad. And it made me focus a lot more on my business and not so much on what would happen if things go wrong. So I recommend that you do the same. If you are an entrepreneur, ask yourself, what is your biggest fear? And maybe try and take a week or 2 weeks where you live in that fear. It could be living somewhere really bad or whatever. Try it. And I think you'll find that it's not that bad as you think. When all that is said, then of course there are some formal legal things that you should consider when you are an entrepreneur. And if things go wrong, there could be a situation where it is going to haunt you for a long time. And the reason for that is that the liabilities you have as an entrepreneur, if you run the business as a sole proprietorship, is liabilities that is connected to you, not only to the company. It means in reality that if you run the business and you use suppliers, maybe you hire some employees, you get obligations, you get invoices you need to pay. And should you fail on those payments, it's just not going to go away like that. It's going to be there in your name for a very long time. If it's small amounts, it's not a big problem. You maybe will get a job and you'll repay it after a few months or something. So that wouldn't be, like a life-changing thing. But if the debt is big, let's say you get a credit in the bank, maybe you borrow $100,000 or something, maybe you have to buy something very expensive, expensive cameras, or maybe a car, a van if you have a transport company. The more money you owe to other people, we say the more liability you have. And what you should consider is, if you have a lot of liability, then a sole proprietorship might not be the thing for you. Then instead, try to put your activities into what we call a limited liability company. So depending on what country you live in, the limited liability company have different names. In Denmark, we call the most popular one, we call that an APS, which is basically the Danish for LTD. And the function of the LTD is to encapsule all the liability you have from your operations into the liability structure. And what happens if you compare with the sole proprietorship is that should you go bankrupt, and with a bankruptcy, what we are basically saying is that you have more debts than you have assets. So the equity capital of the company is in minus. We also call that to be insolvent. And the difference is to be solvent. If you're solvent, you have more assets than you have liabilities. So there is basically money like in your hand. And if you're insolvent, you have more liabilities than you have assets. So should you go bankrupt in a limited structure, then the only money that your suppliers or the people you owe money can claim is the money that is in the limited liability structure. And since you are in this situation where you have no money, there is basically no money left. So that limits your liability and therefore the name limited liability company. It also gives you some level of leverage. Let's say you have a supplier and you owe that supplier, let's say $10,000. They're pushing to get their money. They just don't stop. They call you every day, they email you, and they just want to get their money. So what you can do when you have a limited structure is that you can use that as leverage. You can basically say to them, listen, it's not because I don't want to pay, but I'm in an unfortunate situation. I lost a client, or I just don't have the money to pay. What I'm suggesting to you is that instead of paying you the full amount, the $10,000, I'm going to offer to pay you a smaller amount as a settlement to get the debt, out of the way. If you don't want to do that, I'm just going to throw the towel in the ring and give up and basically just let the company go bankrupt, which means that you're not going to get anything. That means leverage for you, and that can be used in a good way. I'm not saying that you should go out and scam people, but I'm saying that, as an entrepreneur, that's kind of the only thing you have to protect yourself if something should go wrong. I think very few people are in that situation because, they want to be there, but things go wrong in business, right? You can lose a client, or maybe you deliver something, turns out not to work, you have liability. So should that happen, use the limited structure as leverage in whatever situation you're in. Things also go very slow. A lot of entrepreneurs are worried that, if something should go wrong, like overnight, they're sitting on the street. It very rarely happens. Naturally, I don't know all the countries how it works, but I can say that in Denmark, when something goes wrong, it takes a long time. A bankruptcy can take 1 year, 2 years, and from the day that you have an issue with someone, let's say a supplier, you're not paying your invoices, it could take 2, 3, 4, 5, 6 months even before anybody takes action. Just because you cannot pay a bill does not mean that you're going to court the same day. There has to be someone that takes you to court, and you have to tell the court that you don't have any money. Then the court will issue a bankruptcy, you can call it like a declaration. I don't know what the correct English term for it is, but the court will basically say that your business is insolvent, and then there will be what we call a curator that will take the company into this bankruptcy process, right? It takes a lot of time. So in the duration of that time, you have an option to prepare yourself. If you have a business that you think you can turn around, maybe you can keep the clients, maybe you can do it in another company, then you usually have, like I said, 2, 3, 4, 5, even 6 months sometimes to prepare. If you make a new limited company, you can start to put your new clients into that one so that you will not go dead broke when the bankruptcy comes. You're prepared. At the same time, negotiate with people. If you get a lawyer that writes you, if a supplier calls you every day, speak with them and be honest about it. Tell them that, I really would like to pay, but I'm unable to pay. And I'm going to send you my P&L, that's the profit and loss statement. It will show them, exactly how much sales, how many costs you have. And also send them the balance sheet so they can see the equity in the company. If they can see that the money is not there, there is no lawyer that's going to recommend his client to go through a very expensive and time-consuming bankruptcy process, because the lawyer also would like to get paid, right? And every supplier will understand that if they hire a lawyer to get the money from you and you have no money and you have a limited company, they're going to lose not only the money on you, but also the money they will spend on the court and on their lawyer. So use that as a leverage if something goes wrong. That was basically what I wanted to share with you today. Denmark as a country is usually very good for having a limited structure. And if you go to our website, danielaccounting.com, we made some blogs, we have videos and podcasts as well that tells about the Danish limited structure, which was called an APS. Should you have any questions to that, maybe you're interested in incorporating one, then feel free to give me a call. You can reach me on my direct phone, which is +45 26 27 7777. You're also welcome to email me instead, which is jonas@danielaccounting.com. Thank you for watching, and I hope to hear from you.